Did you know that some finance jobs can make you more money than you ever imagined? That's right, the world of finance is a treasure trove of opportunities teeming with roles that can offer substantial rewards. Yet, these aren't your everyday 9-to-5 jobs. We're talking about high-stakes, adrenaline-fueled careers in investment banking, hedge funds, and private equity. These are the realms where financial wizards play, and the potential earnings can be truly staggering, but as with any treasure, these roles are fiercely sought after. The competition is intense, and the journey to the top is often paved with long hours and relentless dedication. They aren't for the faint-hearted, but for those who thrive on challenge and are driven by ambition, they can be incredibly rewarding. So if you're up for a challenge and are ready to potentially earn big, stick around as we dive deeper into these exciting roles. Let's start with a role that's often the first stepping stone in high finance: investment banking. Now, what exactly does an investment banker do? Well, they wear several hats, but their main responsibilities revolve around three pillars: advising, capital raising, and strategizing. Firstly, investment bankers advise companies on significant financial decisions. Think of them as financial consultants. They provide insights into potential mergers and acquisitions, helping businesses decide if it's the right time to buy a competitor or merge with another company. They also help companies navigate the complex world of financial regulation, ensuring that transactions are legal and profitable. Secondly, investment bankers are the bridge between companies that need capital and investors who have capital. They help companies raise funds through initial public offerings, or IPOs, and other securities offerings. If a company wants to go public or raise capital, an investment banker is typically involved in the process. Lastly, investment bankers are strategists. They work closely with a company's management team to develop long-term financial strategies. This involves analyzing market trends, assessing the company's financial health, and creating financial models to predict future performance. Now, let's talk about the elephant in the room: earnings. Investment banking is often associated with high salaries and bonuses, and there's a reason for that. The base salary for an entry-level investment banker can be quite attractive, and as one gains experience and climbs the corporate ladder, the potential earnings increase significantly. However, it's important to note that pay can vary greatly, depending on factors such as the bank's size, the location, and the specific division one works in. But it's not all about the money. Investment banking is known for its long hours. We're talking about 60 to 100-hour weeks, with late nights and weekends often being the norm rather than the exception. It's a role that requires dedication, resilience, and a strong work ethic. In addition to the demanding workload, the job can also be stressful. Investment bankers are typically working on multi-million or even billion-dollar deals, and the pressure to succeed can be intense. But for those who thrive in high-pressure environments and enjoy problem-solving, the challenge can be exhilarating. Investment banking can be a demanding role, but the financial rewards can be considerable. It's a career path that offers the opportunity to work on significant transactions, influence key business decisions, and yes, earn a substantial income. But remember, it's not for everyone. It requires a unique blend of skills, including analytical thinking, strong interpersonal skills, and a relentless work ethic. Before you decide to jump in, make sure you're ready for the challenge. Next, we take a look at hedge fund managers, the strategists of the financial world. Like grandmasters in a high-stakes game of chess, these financial wizards are constantly plotting moves and counter-moves, their eyes always on the ultimate prize: maximizing returns on investment. Hedge fund managers live in a world of complex strategies and high-risk maneuvers. Their task is to manage a pool of investments with the aim of generating high returns. This often involves investing in a wide array of assets, from stocks and bonds to commodities and derivatives. They often use sophisticated techniques like leveraging, short selling, and arbitrage to gain an edge in the market. However, with this responsibility comes a considerable amount of stress. The financial markets are unpredictable, and a single wrong move can lead to significant losses. This is not a job for the faint-hearted. It demands a deep understanding of financial markets, a high tolerance for risk, and an ability to make quick, sound decisions under pressure. But despite the challenges, this role is also one of the most rewarding in the finance industry. A successful hedge fund manager can earn millions, even billions, in a good year. And we're not just talking about base salaries here. but a significant part of their earnings comes from performance fees. This is a percentage of the profits they generate, which can be as high as 20% or more. So, the more successful their strategies, the more they earn. To put it into context, let's consider some of the most successful hedge fund managers in history. George Soros, the man who famously broke the Bank of England, made over $1 billion in a single day by betting against the British pound. Then there's Ray Dalio, founder of Bridgewater Associates, who has consistently ranked among the highest-earning hedge fund managers in the world. However, let's not forget that these are the outliers, the top echelon of the industry. For every George Soros or Ray Dalio, there are countless others who struggle to make a mark. The competition is fierce and the stakes are high. And with recent market volatility, the role of a hedge fund manager has become even more challenging. Yet for those with the right skills and mindset, the world of hedge funds presents an exciting and potentially lucrative career path. It's a world where strategic thinking, financial acumen, and a dash of daring can lead to immense rewards. So if you're someone who thrives on challenge, who has a knack for spotting market trends, and who isn't afraid to take calculated risks, then the role of a hedge fund manager could be the perfect fit for you. While the risks are high, so are the potential rewards in the world of hedge funds. Now let's explore the world of private equity, a sector known for its high stakes and high rewards. Private equity is an intriguing world where professionals use their financial acumen to acquire companies, improve their value, and sell them for a profit. This process is not a simple one. It requires a deep understanding of industries, markets, and financial modeling. It's a little like flipping houses, but instead, you're flipping entire companies. Private equity professionals are skilled deal makers. They're the ones who identify potential targets, negotiate the purchase, and oversee the transformation of these companies. They have to be strategic, analytical, and have a keen eye for value. Some might say that private equity is a high-stakes game of chess, where the board is the global market and the pieces are the companies they acquire. The goal? To strategize, move, and position these companies in a way that maximizes their value before selling them off, ideally at a significant profit. But the work doesn't end with the acquisition. Once a company is under the private equity umbrella, the real work begins. This includes everything from streamlining operations and cutting costs to driving growth and improving profitability. It's about taking a good company and making it great. Private equity professionals often work closely with the management teams of the companies they acquire. They provide strategic guidance, resources, and sometimes even roll up their sleeves to get involved in the day-to-day operations. It's a collaborative effort aimed at unlocking the true potential of the company. Now, you're probably wondering about the earnings. Well, let's just say that the most successful private equity professionals can earn astronomical sums. It's not uncommon for senior professionals to earn 7, 8, or even 9-figure sums in a year, especially when they sell a company for a substantial profit. Of course, these are the extreme examples, and the average earnings are lower but still very impressive. However, these high rewards don't come without high risks. The stakes are high and the pressure is intense. There's a lot of money on the line, and not every deal is a success. Sometimes, despite the best efforts of the private equity team, a company's value might not increase as expected, or worse, it could decrease. This is part of the risk that comes with the territory. But despite the risks, many are drawn to private equity for the potential rewards. It's a career that offers the opportunity to make a significant impact on companies and industries. Plus, there's the thrill of the deal, the strategy, and the potential for significant financial rewards. Private equity can be a high-risk, high-reward game, but for those who succeed, the rewards can be extraordinary. So, how do these roles stack up against each other? Well, let's dive into the world of finance and see how these roles compare in terms of risk, work environment, and exit opportunities. Starting with risk levels, investment banking often involves high-stress environments with long hours and tight deadlines. This can lead to a high level of risk in terms of work-life balance. On the other hand, hedge fund managers face a different kind of risk. They're dealing with large sums of money and making decisions that can either generate significant profits or lead to substantial losses. And then there's private equity. Here, the risk is tied to the success or failure of the companies they invest in. If a company performs well, the rewards can be astronomical, but if it doesn't, the losses can be equally substantial. Now let's talk about the work environment. Investment banking is known for its fast-paced, high-pressure environment. It's not uncommon for investment bankers to pull all-nighters or work through the weekend. Hedge funds, on the other hand, typically offer a more balanced work-life dynamic, though pressure can still be high due to the nature of the industry. Private equity firms tend to have a more traditional corporate structure with a focus on long-term strategic planning. While still demanding, the pace can be somewhat slower than that of investment banking or hedge funds. But what about exit opportunities? Well, all three roles offer excellent career prospects. Investment banking can open doors to roles in corporate finance, consulting, and even entrepreneurship. Hedge fund managers often transition into roles in asset management, financial consulting, or they may choose to start their own fund. And private equity professionals, they have the option of moving into corporate development, strategic planning, or starting their own investment firm. It's important to remember, though, that while these roles can be extremely lucrative, they're not for everyone. They require a specific skill set, including strong analytical abilities, excellent decision-making skills, and a high tolerance for risk. They also require a significant time commitment. Long hours, late nights, and working weekends are not uncommon in these industries. And let's not forget the pressure. The stakes are high, and the pressure to perform can be intense. But for those who thrive in this type of environment, the rewards can be well worth it. It's also worth noting that these roles can offer more than just financial rewards. They provide the opportunity to work on exciting, high-profile projects, build a wide network of contacts, and gain a deep understanding of the financial industry. So, while these roles all offer the potential for great financial rewards, they each require a unique set of skills and come with their own challenges. But for those who are up for the challenge and have the right skill set, a career in investment banking, hedge funds, or private equity can be extremely rewarding. So, there you have it, a deep dive into some of the most lucrative roles in finance. We've journeyed through the world of investment banking, hedge funds, and private equity, each with their unique allure and challenges. In investment banking, we've seen how the role can offer an exciting, high-paced environment with the potential to earn significant bonuses that can skyrocket your overall compensation. However, this comes with the understanding that the job can be highly demanding, requiring long hours and a relentless work ethic. We've also explored the realm of hedge funds, where the thrill of the markets meets the analytical prowess of the fund managers. This role can be incredibly rewarding, with earnings that are closely tied to the performance of the fund. But remember, with great potential rewards comes great risk. Then there's private equity, where professionals have the chance to make strategic decisions that can transform entire companies. The role offers high earning potential, often tied to the success of the investments. However, breaking into this industry can be fiercely competitive, and staying at the top requires dedication and a keen eye for good investments. Each of these roles offers a unique blend of challenges and rewards, and the potential earnings are certainly enticing. But it's important to remember that these are highly competitive fields, with each role demanding a specific set of skills and a relentless drive for success. So whether you're drawn to the strategic decisions of private equity, the fast-paced environment of investment banking, or the thrill of the markets and hedge funds, pursuing a career in finance can be a rewarding journey. We hope this has given you some insight into these high-flying roles in finance. If you want to learn more about finance careers, be sure to explore more on our channel and share your thoughts in the comments section. Remember, the sky's the limit in finance.